All right, let's jump right in. We need to talk about one of the biggest puzzles in crypto right now, the XRP paradox. You see all this incredible news floating around, big banks making bold predictions, huge amounts of money flowing in, but then you look at the price and it feels like it's stuck in neutral. So what is actually going on here? Let's decode this thing.
And this slide really just lays it all out, doesn't it? It's like we're looking at two completely different stories. On the left, you've got the highlight reel. Huge price targets from banking giants, ETFs just gobbling up capital, and the available supply on exchanges drawing up. But then, you look at the right side. The reality. The price can't seem to break through that $2 mark, some worrying patterns are showing up on the charts, and there's just this general feeling of uncertainty. These two tapes just don't match up.
Okay, so where do we even start with this investigation? Well, let's follow the money. Our first major clue is the serious, and I mean serious, interest coming from the big institutional players. This isn't just everyday investors anymore. This is the Wall Street crowd. $1.15 billion. I mean, just let that number sink in for a second. By the end of 2025, investment products like ETFs that are tied to XRP have already pulled in over $1 billion. That's not just a casual bet. That is a clear, loud signal that some very sophisticated investors are building some very significant, long-term position.
And this is where it gets really interesting. In a single week, while the rest of the crypto market was actually seeing money leave, over $400 million in outflows, XRP ETFs did the complete opposite. They pulled in $70 million of new money. Think about that. When everyone else is selling, big investors are selectively buying XRP. That tells you a lot.
Now, this isn't some random influencer on social media we're talking about here. This is Standard Chartered, a massive global bank. And their head of digital assets research is putting out one of the most bullish price targets we've seen, $8. They're not just quietly buying in the background, they are publicly planting their flag.
So why are they so confident? Well, it's not just a bet on the price going up, it's about what XRP actually does. Institutions see it as a piece of technology, a tool. It's built to move money across borders in seconds for basically pennies, totally sidestepping old, clunky systems like SWIFT. For a bank, that's not just a small improvement, that's a potential game changer. That's the real-world value they're betting on. And when Ripple's CEO says they could capture a slice of SWIFT's pie, you realize that would require a much higher XRP price to make it all work.
So if the big money is getting interested because XRP can actually do something, that leads to a whole other question. What is all this new demand chasing? And that brings us to our second big clue, which looks like a potential supply crunch brewing right on the blockchain. It seems like the available XRP is just disappearing.
So real quick, what do we mean by supply shock? It's a classic idea in economics. If the amount of something available to buy suddenly shrinks, but people still want it, or even more people want it, the price has to adjust. And usually, that adjustment is upwards, and it can be fast. The data suggests this might be exactly what's building up for XRP.
And wow, this chart just paints an incredible picture. The amount of XRP just sitting on exchanges, ready to be sold at a moment's notice, has absolutely fallen off a cliff. We're talking from almost 4 billion tokens down to 1.6 billion in just a couple of months. That's a more than 57% drop in the liquid supply, hitting levels we haven't seen in 7 years.
So what does that actually mean when people pull their coins off exchanges? It's pretty simple, really. It's a huge vote of confidence. It says, I'm not looking to sell this tomorrow or next week. I'm putting this away for the long term. And when you have fewer sellers, that removes a ton of downward pressure on the price.
But, a good investigation has to look at both sides of the story. So now we've got to flip the coin and examine the counter evidence. What are the bearish signals that are keeping this price pinned down despite all the good news? And here it is, the classic battle, right? You have the bulls, like Standard Chartered, looking at the fundamentals, the utility. Then you have the bears, like veteran trader Peter Brandt, who are just reading the chart. And what he sees is a classic bearish pattern called a double top. Basically, imagine the price hits a peak, falls back, tries to get back to that peak again, and just fails. To a technical trader, that failure is a huge red flag. It suggests the buyers are exhausted and a big drop could be coming.
And then, of course, we have to talk about the elephant in the room, the one event that casts this shadow of uncertainty over the market every single month, Ripple's scheduled XRP escrow release. It's this known, predictable source of potential supply.
But it's so important to understand how this actually works, because it's not what most people think. Yes, on the first of the month, 1 billion XRP gets unlocked, but it is not a billion token dump on the market.
Not even close. Ripple takes what it needs for its business and then immediately relocks the rest, usually 800 million or even more, right back into escrow. The direct impact is small, but the psychological impact, that's a different story. Just knowing that unlock is coming creates fear, uncertainty, and doubt. It can act like a ceiling on the price, scaring buyers away before they even get started.
All right, so we've looked at the strong institutional bull case. We've looked at the cautious technicals and the supply overhang. Where does that leave us? Let's try and piece this all together and figure out the potential paths for XRP as we head into 2026. It really feels like there are three main paths XRP could take from here. In the bullish scenario, those ETF inflows just keep coming, the supply shock gets worse, and the price finally breaks out. In the neutral case, the buying and selling just cancel each other out, and we stay stuck in this range. And in the bearish scenario, the technicals win, the unlock pressure mounts, and we could see a drop. The key is, now you know exactly what drivers to watch for each outcome.
And that brings us full circle, right back to the core puzzle we started with. We've got this incredible fundamental demand from some of the biggest players in finance crashing head-on into persistent, nagging market uncertainty. So the big question is, will 2026 be the year that this paradox finally resolves? That is the billion-dollar question every single person watching XRP wants an answer to.